Well, with changing appetites around share market volatility and investment timelines, Australian investors are rethinking how they generate monthly income. I'm sitting down with Nehemiah Richardson, Chief Executive and Managing Director of TermPlus, to get his take on it. Nehemiah, good to see you again.
Yeah, great to see you again, David.
All right. If you had to describe how investors are feeling now in this environment, what would you be? Give me one word.
Yeah, so that one word's cautious, because I think when you have the cost of living pressures that we have, driven by geopolitical and other types of risks, interest rates going up with concerns in inflation, volatility in share markets, very hard, I think, for individuals, whether you're a retiree or whether you're young and growing your wealth, to feel comfortable, to kind of continue to grow your wealth in the context of so much uncertainty.
How do long-term professional investors approach an environment like this? What can we learn from?
Okay, so I think firstly, you don't respond to headlines, you don't panic. And then I think secondly, within that context, you can't be passive. Money has different uses at different times. So there's kind of 3-4 buckets you can think about. Number one is I need cash for day-to-day needs where I have immediate access. Number two, I have need for income. Number three, I have a need for growth, right? And so within that context, you don't panic. What you have to really think about is, what sort of return do I need and what's the use of the money? What's the risk that's associated with that? Because you have different ways of achieving that. And when do I actually need the money? Meaning, do I need it immediately? Can I be patient, etc.?
So where does TermPlus fit in those buckets?
TermPlus is one of those income options. Okay, and so we designed the TermPlus product, number one, to provide reliable income. So we pay a regular monthly income to our investors. Number two, I think what's really important, that question of, do you need your money? Okay, this is not for day-to-day needs, because we have 1 year, 2 year, 5 year terms. So within the context of what you're trying to achieve, we'll give you regular income, or that's our objective. You also have to be comfortable that whatever term that you choose, you won't need immediate access to your cash. You're not going to get your cash till the end of that term. Number three, I think what's really important is it's a floating rate product. So when you look at the RBA cash rate, which can move up and down, the one thing that we designed the product for is we pay a fixed percentage above that RBA cash rate. So it floats, and that means your income can move with the interest rate, so you have some protection against inflation.
Right.
I think also the fact that we have a highly diversified global portfolio, and so US and Europe, and so you're diversifying away from Australia. We have over 4,500 loans that support the portfolio, so very diversified. And the reason we do that is we're trying to mitigate the risk of loss of capital. We can never guarantee that. We're not a bank, we don't have a government guarantee, but we seek to mitigate the risk of capital loss as much as we can whilst paying that regular income. And the fact that it's really simple, you can go in, you can sign up, you're in 2 minutes. So I think if you're looking for reliable defensive income and you're looking for some level of capital stability, and like I said, we can't guarantee it, we're an investment product, but we seek to, as much as possible, mitigate risk of capital loss and ensure we get reliable income.
Great. Nehemiah, good to see you again.
Yes, thank you.